All right. What is up, traders? What's up, tycoons? Really excited to bring you today's video. We've got something you're not really going to find anywhere else. This is going to be an EPR model. This is going to be an employment population ratio model. And basically, we have the inputs here. Okay, so you have the employment population ratio in blue. All right, then you have the coincidence economic indicator index. Okay, and then you've basically got the rate of change in employment here in orange. But the main thing you really want to pay attention to is going to be these lines down here, the green, yellow, and red. Okay, now I did not come up with this model necessarily. This is something relatively new from Jay Kaeppel, Jay Kaeppel, not sure how to say his name, but the key points of this model, all right, is that employment is critical for the health of the economy. The more people that are earning an income to spend on goods and services, the better, vice versa. The employment population ratio provides a broad measure of economic health, and this piece details a newly constructed model that may help to highlight economic recessions early on. So what I did was I went ahead and actually, got a ThinkScript for this model right here and for the inputs. Now, how would you use this, right? Why would it be useful? Why would it be helpful? Well, we'll go ahead and show you guys here. Now, I'm trying to still tweak it and figure out, all right, but we have the S&P 500 here on the top. And so far, it seems like a pretty good sell signal to me. All right. Now, what do I mean by that? We'll go over what the scores are for this indicator a little bit more in just a second. But essentially, we're looking for a change, right? So green means good, and basically the next month's outlook for the economy, all right, looks well, right? And so once it goes to yellow, starting to get into a little bit more cautious, like, hey, we could potentially be getting recessionary. And then red is basically the next month looks like we're going to be in a recession, okay? And so if you take a look here, when we shift from green to yellow, right, that's right here at this point. And what does the stock market do? Well, the stock market shifts down pretty significantly, right? And once it shifts back to green, okay, that's kind of a green light for your next, long-term secular trend, right? I mean, this is, a few years right here of an uptrend we're seeing while this is continuing to go green after changing from green to yellow, right? So, you come in here, you get your signal and you say, all right, well, maybe you don't necessarily want to short the market or something, but maybe this is where you're looking at and saying, hey, well, right now may not be a good time to buy into the market. We can see that this is, years and years of it's still an overall downtrend, right? Even until we get the next signal, it's still a pretty significant downtrend, right? And so you can avoid potentially all of this area here, wait for the next signal. You come back in, you ride it out for a few years, and then what do we see? Well, it shifts again and it comes down, right? Now, again, I'm still trying to figure out exactly how to, use this as a potential buy and sell indicator. But so far from what I've seen, again, is that when it shifts from green to yellow and yellow to green, okay, that seems to be, the buy signals, right? Okay, so if you look here, we shift from green to yellow, right? And then the next time that we shift from yellow to green is over here. Again, you could have waited out years and years and years of this downtrend. And then once we go from that green here up, we see it shifts back to yellow right here. We come up, okay, and we can see again we have a long uptrend right here. Now it shifts, all right, from green to yellow here and then back to green. So it's not going to be some perfect signal. Again, I'm still trying to figure it out, but this is very, very interesting. And what I really want to highlight most recently is last year in 2022 we had the technical definition of a recession, okay, and so that was basically two consecutive negative GDPs. But everyone was saying that, well, it's not a recession. It's not a recession. The labor market employment is too strong. And so if you're using this EPR model as a way of, looking at if the economy is recessionary or not, you can see it stayed green throughout that entire period here. So, maybe this really is going to be a much better type of recession indicator. And as you can see, even currently, it's still staying green. So while the market has, essentially just only gone up a little bit, right? If we take a look at the last time when it slipped from yellow to green, Okay, that's right here. The market's risen a little bit, about 11%. So, still was a good buy signal. You just had to, basically hold through that bear market that we experienced in 2022. And so what'll be really interesting to me in tracking this model moving forward is if this shifts to yellow, are we going to potentially be heading for that recession that everyone has been talking about for the last few years, right? If we dive into the model a little bit more, you know, the model components or the employment population ratio. Now this right here only works on a monthly time frame, due to the fact that a lot of these economic readings and data are put out monthly. So you do want to keep in mind of that. This is a flexible grid that I have. If you're not familiar with the channel, I actually have a Discord and I share all of my flexible grids with everyone. So you're pretty much not going to find this ThinkScript anywhere else. I don't know how long that's going to stay, but even if someone else does come up with one, it's not necessarily going to look the same as mine. So if you do like this model and you are interested in it, you guys can join the Discord. Okay, you get access to this flexible grid, as well as many other flexible grids and different things, lots of different resources and analysis and charts and trade ideas, things like that. But we won't spend too much time on the Discord. I really just wanted to share this with you guys because I think it's pretty special. You guys can read a little bit more, okay, about Jay Kaeppel's EPR model, his new economic indicator. It was a really good read to me, and I thought it was pretty interesting. You can see that this is basically how they chart their own EPR model. And it looks kind of ugly to me, if I'm just being honest. So, Thinkorswim is really nice and has some great features. And we could see in here, I'm still tweaking how I want it to look exactly. If I come here, we can change this. We can change this EPR score to more of a little bit of a bar chart, something like this. And it's kind of a little bit easier, but the one flaw I do see with this script is it doesn't really show you the zero whenever you put it on the bars. So that's why I've been using something like this, just so you guys can see that the red value in there too as well. But this is going to be really good, right? And this may be something that people and economists, and you may actually hear a lot of people start talking about this EPR model in the future. And you guys, if you're watching this video, can be one of the first people to actually start using this EPR model, tracking this EPR model. And the key thing to remember is that it's on a month-over-month basis. So each input here is looking towards the next month and saying, well, does the next month look recessionary based on the data in the model? And we've continued to have this green line here. And we'll look to see if this is going to change, if we're potentially going to get that recession, again, that everyone has been predicting really since 2022. So for 2 years now, everyone's been predicting a really big recession. The Fed most likely is going to cut rates around a recession, either during, before, or after. And so if we start to see this go yellow, I'm wondering, will that be a sign that, hey, maybe we're about to get this recession and maybe potentially the Fed is about to start cutting rates soon?